Good morning, folks. It's Monday. It's early in the session. Market's been open for about 2 hours. Let's take a quick spin through the charts. Gold in the monthly, no change here. Still in a primary uptrend, although metals haven't felt very good recently. Gold in the weekly time frame, week is starting out weak. How's that? The week is starting out weak. Resistance overhead, this the 10-week moving average and a horizontal support resistance level. It appears that we got a bear market rally, if you want to call it that, and price has rolled over. MACD in bear mode on a sell signal and energy low. So, the metals need some kind of catalyst to send them higher. We're in the seasonal period where, the metals, it would be appropriate for the metals to be heading higher right now. But we have to keep in mind that we're in the midst of a liquidity crisis and a global debt collapse. And so that's obviously playing on the metals. Gold in the daily time frame. We can see, as expected, price has dropped down. It closed this open gap and is now bouncing. So no surprises in the daily time frame. MACD has given us we're on a relatively new sell signal, still in bull mode, suggesting that the primary trend remains upwards. Energy is in the tank. Silver in the monthly, bouncing on support at it's actually a little bit lower than the $19 round number. Price is actually below that level and bouncing, but we do have some support at the monthly time frame in silver. Here in the weekly, we can say that the week is starting out weak again. We had a little bit of a doji candle. It's right there. You can barely see it. Bouncing off support. Hello. Bouncing off support. $19 round number. This horizontal support resistance level. MACD in bear mode and energy low. Silver in the daily time frame. It's a bullish doji candlestick, but notice that $19 is acting as resistance currently rather than support. MACD it has now dropped down into bear mode. It's on a sell signal. Energy is very low. So metals not looking good. So I told you last time we'd look at the UE in the next update. And so here it is. This is the UE in the monthly time frame. I'd been watching this upward sloping channel with the assumption that the mining stocks were going to continue this upward movement. And obviously they've dropped below that channel and currently appear to be headed lower. So MACD about half and half between bear and bull mode on a sell signal, energy very low. Here's UE in the weekly time frame. We've got price has bounced off the lower median line of this Andrews pitchfork, bounced up into the 10-week moving average and then rolled over. And so that's where we're currently at. Price has rolled over, appears to be headed lower. MACD in bear mode on a sell signal, energy very low. So I had been assuming that the larger cap mining stocks looked better than the juniors, but that's not what I'm seeing. I haven't looked at GDX or the UE in a while, and again, I was expecting to see better looking charts than what I'm seeing this morning. So here's GDX in the monthly time frame. Downward sloping channel. We're finding support at the bottom of that channel. Would be appropriate to get a bounce, but we have to wait for that to happen. Technical downtrend, in this time frame, high, low, lower high, lower low, You could argue that that high exceeded the prior, but basically, if you ignore the wicks, it's a lower low, or excuse me, a lower high, and now a lower low. So technical downtrend. Coming down, we do have this horizontal support resistance level a little bit lower. MACD split between bear and bull mode, currently on a sell signal, energy very low. GDX in the weekly time frame, same as UE, bouncing off a support level, bounced up into the 10-week moving average and then rolled over. So currently playing with support on this. This is the lower median line of Schiff pitchfork, finding support there. MACD in bear mode on a sell signal, energy very low. So now we're back in the juniors. We looked at this chart last time, bouncing off support at both the bottom of this downward sloping channel and the bottom of this upward sloping channel. So potential bounce there. But again, technical downtrend. MACD in bear mode on a sell signal, energy very low. GDXJ weekly time frame, rolling over still from the 10-week moving average. Not an exciting start to the week. MACD in bear mode, very oversold. Energy is low. GDXJ daily time frame, just following this. This is the first median line extension of this modified Schiff pitchfork. Price has been finding support on that median line. Today it's actually a little bit below that median line, so not looking good there. MACD on a sell signal, dropping into bear mode, energy very low. So mining stocks don't look good, folks. And of course, part of the reason that is so is that we have strength in the US dollar continuing to show itself at the start of this week. Thursday and Friday it picked up last week, and it's continuing today. If you notice, when we looked at this chart Friday, the dollar was just pushing up, hadn't actually entered this horizontal support resistance level, but you can see that this morning the dollar is pushing up into that level. MACD strongly in bull mode, energy extremely elevated. Here's the weekly time frame. You can see that the dollar shot out of the gate this morning with a big move upwards. MACD in a bull mode, energy very high. US dollar in the daily time frame, and you can see it here that the dollar is pushing strongly higher this morning, has pushed up through this. If you want to look at this as a horizontal resistance level, price or the dollar has pushed through that level. I prefer to think of these areas as zones, and so I tend to draw support and resistance zones as a rectangle rather than a straight line. And so anyway, the dollar is pushing up into this resistance zone. MACD, we're on a relatively new buy signal, lots of room to run before we get to the overbought level in MACD. I haven't talked about that in a while. So MACD is not a bounded indicator, but what oftentimes happens is that prior highs and lows will act as resistance or support, and price, when MACD reaches those levels, the prior highs and lows, price will turn around at that point. And so my point this morning, based on MACD, is that we have a very long way to go before MACD becomes overbought based on the prior highs, which suggests to me that the dollar has a ways to run before it even thinks about pulling back. So anyway, I would expect continued strength in the dollar this week, which won't help the metals any. So We looked at this chart Friday. Interest rates are headed higher. This is a chart we didn't look at Friday. This is the 40-year downtrend in interest rates, and that downtrend has ended. And so the last time we had a sustained rise in interest rates, it lasted for 18 years. And so just a thought to tuck into your bonnet this morning is that we could be seeing the start of a very long-term rise in interest rates. And obviously that would be devastating to both the overextended stock markets and the latest real estate bubble. And you look at prices, housing prices in Florida, Miami, for example, have doubled in the last 2 years. Clearly that is a bubble and an unsustainable bubble. Prices can't double in 2 years and have people still able to afford housing. So when people can't afford housing, house prices have to drop. So, and rising interest rates are going to contribute to that downturn in real estate. So anyway, just keep in mind, this is part of the big picture, what we're dealing with at this point in the financial markets. This 40-year downtrend has ended and interest rates are heading higher. We can see that this morning. This is the yield on the 10-year note. Big gap higher, that was Friday, and pushed up through the 50-day moving average on Friday, and now that move is continuing this morning with a strong bar so far, and again, it's still early in the session. Strong move up above the 50 this morning. MACD is in, well, half and half. So trying to move back up into bull mode. Excuse me, currently on a buy signal. Energy is extremely elevated and headed higher, rolling over, however you want to look at that. Energy is very high. Interest rates are headed higher this week, would be my guess. Yield on the 30, this is the weekly time frame. Again, a big, strong start to the week. Big move up in the 30 starting this week. MACD is in bull mode on a buy signal. Energy very elevated. We haven't looked at this in a while. This is the interest rate on a 30-year fixed mortgage. Look at that, folks, 6.9%. And just back as recently as January, that was more like 4%. So, that's not a double, but what is that? Yeah, almost a double, 60-70% increase in mortgage rates since January. And so again, no way that real estate prices are sustainable when we're getting this kind of a change in mortgage rates. If you look at the headlines, in July, there were, I think it was 60,000 houses fell out of escrow. They were pending closure, and then people bailed. They either lost their loans, the banks backed out of the loan. Bank says, no, I locked your loan, but I'm I'm backing away from it now. Or they simply walked away. And if they had put down earnest money, they walked away from their earnest money just because, it doesn't make any sense to buy housing right now. Prices are headed lower. I've got a couple of cities that I watch in realtor.com. You can go in there, you can set up, if you just indicate interest in a given city and save the search, you'll then start getting emails about housing in that city. And so you can see price decreases, new listings. And so I've got a couple of cities that I watch in realtor.com, and based on that, very small sample, personal sample, new listings are increasing and price decreases are increasing. So just indication that the real estate market is weakening. This is Bitcoin. We looked at this Friday. and I didn't notice until this morning, that was a 9% drop. So Bitcoin lost 9% on Friday, continuing lower this morning. And notice it's down below its 50-day moving average. MACD in bear mode on a sell signal, new sell signal, energy very low. Crypto is reacting to, this is a letter that came out from Federal Reserve on the 16th, and they are warning banks and financial institutes that crypto is dangerous, may pose risks. And of course, yes, we've always known that crypto has risks. Everything in the financial market has risk. What is new, or what I believe is the motivation for this letter, is that the central banks have no intention of allowing the current crop of cryptocurrencies and stable coins. They aren't going to be part of the central bank digital currencies. They're all going to die. And if you've got money in crypto, you've got an opportunity to get out before the banks kill those markets thoroughly, thoroughly dead. This reminds me of the Yellow Brick Road. Wizard of Oz was the name of the movie, where they killed the Wicked Witch thoroughly. Crypto, my opinion, current batch cryptos is going to be killed thoroughly as part of launching the central bank digital currencies. So now we're in the equity markets, daily time frame, this S&P 500. So the move lower is continuing this week. And of course, we've got interest rates rising, which sucks money out of the equity markets into the debt instruments. Price finding support, or playing with support, on the 10-day moving average. And let's see, MACD giving us a new sell signal. So still in bull mode, but a new sell signal. Energy dropping substantially. So it appears that this was just a bear market rally, and that price is turning over again for another down leg. And we'll have to see, how big is this down leg going to be. But again, looks like this was a bear market rally that is now rolled over. Same thing or similar in the Dow. Poked up above the 200-day moving average, but could not hold that level of support. Dropped below it on Friday and is continuing lower today. Looking for support on the 10-day moving average. Is that the 10? I got to check. I'm drawing a blank this morning. Hello. Yeah, we'll keep moving. Looking for support there. MACD in bull mode, very close, right on the verge of a new sell signal. In MACD, energy is mid-range. One last chart. This is NDX. Drop below the 10-day moving average. That's not the 10-day, that's the 20-day. That's the 20-day moving average, excuse me. So drop below the 20-day moving average this morning and appears to be headed lower. We've got a new on Friday, new sell signal in MACD, although still in bull mode, energy headed lower. So again, it appears that we just completed a bear market rally in the equity markets, and they are now headed lower. So that's all I got for you this morning. New stuff in the news, couple of things. Germany had a new PPI on, I think it was Friday. It was the largest increase since 1949, primarily driven by increases in natural gas and electricity. And of course, when you look at, that's the producer price index, those increases get passed on to the consumer. So the largest increase in PPI since 1949 will result or move into the CPI, the Consumer Price Index, and Germany will have its largest increase since 1949 in consumer prices, again driven by natural gas and electricity. Europe, because they're expecting a cold winter, and not only a cold winter, but a cold winter without natural gas. They first went out and bought up all the wood-burning stoves, so you can't find a wood-burning stove, or if you do, it's going to cost you dearly. The latest run has been on electric heaters, space heaters, and so now the price of electric heaters has risen dramatically. They've become hard to find. And of course, electric heaters that's the least efficient way to produce heat. So basically, you're just turning electricity into heat through resistance, and it's very inefficient. And of course, what is Europe short on? Energy. They don't have enough electricity in their grid to run all these electric heaters. And so anyway, Europe continues to shoot themselves in the foot with their sanctioning of Russia. That's enough for today. I will talk to you soon, folks. Have a great rest of the day. Talk to you soon.